to begin by understanding, take your insights on what the quarter gone by in terms of performance for both Tata Motors domestic and JLR, and what lies ahead for the company.
Sure. I think from a overall performance perspective, we had seen a sequential improvement in performance as the semiconductor issues started gradually improving. I wouldn't say resolve itself, gradually improving. And we also saw stability in the commodity prices that we had. We also noticed that the demand scenario remained robust and is likely to remain robust going forward as well. And what we see in the overall environment is things gradually improving from a semiconductor perspective, commodities remaining stable, and therefore a progressive and sequential improvement in the performance of the business continuing from here on. The fly in the ointment challenges that we have is the here and now issues we are seeing related to the COVID-related lockdowns that we see in China, as well as the Russia-Ukraine conflict that is out there. Both these have a ramification on the demand to a lesser extent, but definitely more from a point of view of supply security, and then of course on inflation. Particularly the COVID-led lockdowns in China has impacted the immediate quarter. If you look at the Chinese GDP, has just come in at minus 11%, and we do expect stress as far as the immediate quarter is concerned. But the good news there is that we hear from our Chinese colleagues that the governments have already announced relaxation of COVID measures and reducing the intense lockdowns to a fewer places. And from June onwards, we do expect to see that relaxations continuing even further. So let's wait and see how that plays out. And that has obviously meant that some of the supplies from China on parts, etc., which is going out, has caused an impact. So an immediate demand issue in China and a slightly longer-term impact with respect to the supplies there. But we know when the COVID lockdowns lift, we do see demand coming back strong and things supplies also starting to pick up. So far, Q1, we do see a stress, but thereafter, we do expect continued improvement in the performance of JLR. So that's the JLR performance. Coming to Tata Motors, last quarter, again, we saw sequential improvement, very strong growths in both passenger vehicles and commercial vehicles. Last year was the first time we've increased market share across all segments. And that has been a very heartening measure, both for PV and CV. And performance of the business is continuing to lift. And at this point in time, we see a robust demand in commercial vehicles across all segments. And passenger vehicles continues to be on a good wicket with respect to demand situation. What could be the worry beads that we have? I think the inflation situation, price rises, fuel price increase, and interest rate rise. That combination means that we need to keep a close watch on demand. But at the same time, there is significant capital investments happening from the government on infrastructure spends. GDP growth is picking up post-COVID, which would all feed into the growth as well. Hopefully, with the interest rate rises that the RBI is taking, inflationary expectations should start coming off. And that will actually be good from the overall GDP growth. So this may have temporary aberrations there, but we believe that both CV and PV are entering a long-term growth cycle. And then add EV on top of it, then we believe this is only the picture gets rosier, because we believe the adoption rates for EVs will be much faster than what we are internally planning. And the penetration is already at 7.5% of the portfolio. We expect that to increase to almost 25% by 2025. And that would mean that the pace of EV adoption will step up quite substantially. And we would want to lead that pace, the adoption, by launching more exciting cars, extended range cars, high technology cars, cool design cars. That is what you saw between Nexon Max, Avinya, and the Curve as well. So I think, and then of course, commercial vehicles also gets into electric. And there again, we have the world of electric is split into the buses, the last mile connectivity, as well as the whole, what we call as the GCC gross cost contracts, where we are able to run buses as on a rupees per kilometer basis, where we've also won multiple tenders, the latest being announced L1 on the CESL tender as well. So a lot of action on the whole journey towards electric mobility and the journey towards net zero, which we are committed to. So that's the long and short of it.